Okay guys, it's Monday morning. I don't normally trade on a Monday morning, and I'm not really trading this week because I'm going away on Wednesday. But there's a few things I've said in the past and people kind of pull me up on it. I see you can pick a direction on a flick of a coin, and to a degree you can. So I was trading the DAX this morning. It screamed down and screamed up. So depending on your direction, you both could have won. So let's do a little experiment, shall we? Roll the intro. And a warm welcome, one and all. Let's get a coffee because we all know Scruffy likes a coffee. So, we're going to look at the DAX. It's all marked up, it's ready. And we're going to flick a coin for direction. We'll do heads is up, tails is down, best of three. So we'll just flick this a few times just so that you can, before we start, I'll look away so I can't really see what's going on. Right. So it's at a random point. So we're going to do 3 flips from now. So that's tails. So that's 1 for down. 2 of it makes a winner. Heads was long. So this coin toss is the deciding factor as to whether we go long or short. Right, we're going short. So we're looking for shorts in this market. Now, I did it earlier on. So flick that away. And what we're going to look for are elements of the chart that I can use to get into this said chart. Okay. Now, first thing I would do is I would look at the hourly to see what is going on with it. Now, as we can see, it is pushing up away from the gap fill. All right. Now, that could actually work to our advantage. Why is that? Because we know markets look to fill gaps. So, oh shit, sorry, pull that back. So we know it'll look for that. But what we can also see is a steady drive. There's another drive down here. So that's pushed up. The price is contained inside of that. So if I'm looking at basic structures from here, if I look for the top of the move, which was there, and back down again, right, we've got some crucial areas. So there's a point of attraction, and there's another one directly above it, which is up there. Okay, so I've got points of attraction from that. This is the gap close. So it's gapped up, it's tried to come down and then gone away. Question is that near an expansion point? Well, if it started down there, got up as high as that point and came back, it's bang on a turning point right now. What I should have done is actually put an order in on that. But there's a key turning area. We look for about 10 pips per trade. Why? Well, why not? So I've got that set up. I can see the criterias are all matching up. Bish bash bosh. Take it down for 15 minutes, see what's going on. Okay. I've got another move here that is aggressive. And drop this down into 5 minutes so I can drill right into that particular move. Put a retracement on. I'm going to enter on the 23, which is in and around this level, to get back down onto 50. So we can do that. So we'll look to sell. I'm going to sell it on the bounce level, which is there. We're going to put in 10 pip target, which should be about there, which is on that 38 line. And all I need to do now is I'm going to follow this price up into these levels that I've put in. Just move that across there. And hopefully we start finding a trade. So that's there. Now, if I was to look at this from a scalping point of view, now I'm not using my sheet or anything like that. What I would need to do is to figure out what a reasonable target is for this thing. So if I go out to a daily, and let's just drop some indicators on. We don't need any of this lot. Just take all of this off. And I put on an ATR. I can see that ATR is 178 at this moment in time. Take that back down to 5 minutes. Just like so. So let's have a little look. Let's get my calculator out. 178 divided by 3, divided by 3. 19 is a reasonable day trade, so say 20 is a day trade, so 10, yeah, I'm going to stick with about 10 pips. Okay, this looks like it might trigger in any second now. Let's just watch this. I'm going to hold it onto that 38. Now the premise of this is quite simple. As long as that top doesn't break, so it's actually slightly in the wrong place. It should be probably about there. I'm looking for this 23 point. So the higher I can get that up, the better. And then it's going to come down onto here. It breaks that, I'll have to reassess it. But at the moment, it's in here. It hasn't gone for this high as yet. Take this over onto the hourly just so we can see what's going on with this. Now the hourly is pushing up heavily. Okay, so I really want to keep away from the price and let it exhaust. Okay, so up here would be nice, there or there. Okay, take this down to 5 minutes. Let's have a little look. This is the beauty of pending orders, guys. Drop that onto there. Okay. So what this fib here, this is what I'm using as a trigger point. So that doesn't really matter, but these levels do, because they're from higher time frame and they are clear expansion points that I can, well, that I can easily recognize. So again, what I'm going to do is I'm going to let this candle push up and I'm going to pull this underneath it, sort of onto there now. So now it's rattling against here. Okay, that 23 will become significant once it's found its top. But we've got to find the top first. But in the meantime, we're going to trail the price underneath it. That way, we always against it. Now, if I was looking to go long, I'd have been doing it the other way. I'd have been doing a candle count and placing the order above it for the trade to come in. Right, this has been breached. So what we need to do is we'll just push that up there a second. And when this candle closes, we'll put it on the top and we'll see if it gets breached again. At the moment it hasn't. Ideally it wants to be on 15 minutes. So it really wants to be pushing against this particular move. But really you could even use that one there. But never mind. We're just looking to get a quick scalp out of this to understand the market. The blue lines are what are important to me at this moment in time. Okay. Right. Just while this is thinking about what it's doing, what the fib is for it's actually framing the trade for me. It's framing where, right, we're in. So we're in on a short. Now, this is where a little bit of jiggery pokery comes into it. I can now see I'm targeting the 23 line based on the point of entry. So I'm going to get rid of this for now. Move this down. I know this market has a high probability of coming up here. So all I need to do is work out a little bit of a trade pattern inside of here that is viable. Now, the one thing that I've done here is I've targeted appropriately because I don't want to stress the market, and I sure as hell don't want to fight the market because I can't pick a direction. I'm having to do this on the flick of a coin. But there it is, it's in front of you, it's happening. So let me just look at something. So if I pull this right down, what we see in here is we've got a fib at daddy level, a fib and a key level. So the chances are it's going to bounce here, here, here and here. They're all key bounce points. I don't really want to go much past this one. So what I would do at that point is I would look for reasonable staging points inside of there, and then work on a price management system, which is 1, 2, 3 trade, 4, 5 damage control. And that's a simple process. Right, we're in. We can see it's pushing down a little bit. One of the beauties of a strong directional drive like that is it'll try and come back on itself. Just basic stuff. You've got opposing positions, profit taking, people caught off guard, all sorts of different things. It creates the retracement. And it's that retracement we're going to be taking a shot on. So let's play this one out and we'll see. So it's coming down. We want to get it to these tails at the bottom. That'll give us a reasonable, well, give 65. I mean, we did it earlier on and we've already got to 79. So let's have a little look, see what happens. Okay, boys and girls, we're having a major discussion here. One of us went in the garden and her hairs fell out when I'm trying to do some work. Crazy cow.
You call it crazy?
Well, at least you didn't say a cow.
Well, I am used to it now.
There you go. Straight down, thought about what was going on. Another 65 quid in the pot. And let me take that off, make certain I've switched my tickets off. I have. Why? It's quite simple. You've got a strong drive. It has to retrace on itself. The actual trick there wasn't the fib, wasn't the time frame. The asset might have something to do with it because it's quite a fast-moving asset. And you need a fast-moving asset in order to achieve quick gains. If you've got a slow asset on your wrong side of it, they're a nightmare because they don't pull back that much. They do, but it's only like 2 or 3 pips. Things like the DAX US 100, it will pull back 10, 20 pips all the time. They have very deep retracements. Now, if you're just looking to be in and out quick, you work out what a reasonable target is for that, which is why you saw me get a calculator out. I was sitting working out roughly what the day trade is and then half it for a scalp. And then just get out of it what you can, which is what I did, based on key levels, key fibs, where it might potentially turn, and then, well, just trade it. Simple as that. So there you go, boys and girls. It was really a follow-on from the 1 minute chart I did this morning. I did that really for shits and giggles, to be honest.
For what?
What, have you never heard of shits and giggles?
No.
Have you
I've
not?
heard of giggles, but not with a...
What, you've never had a shit?
I should have. Oh, I should have now.
You fall into it every time, boys and
I
girls.
don't have a name of it. I don't even make it up.
Well, all right, then put it in the comments, boys and girls. Has any of you lot ever heard shits and giggles? I've heard of it all the time. Eh?
I didn't make it up. Laughs and giggles.
No, it's shits and giggles. Seriously, you've never heard of that?
Not the first bit, no. I honestly think you're making it up.
Well, you never heard of sex till you met me either, so
Oh,
there
you
you go.
have to go, here we go.
What, here we go? What, we going?
It's the old chestnut.
Well, works for me. Okay, boys and girls, that's that done. Apparently we're going to play with some chestnuts. I've never heard them called chestnuts before. I've referred to them as chesticles. And you've got a good set of
I
chesticles.
thought you were working.
Well, clearly you're not.
I am up to the post just to can't get the right size.
We're all excited we're going holiday. Anyway, as always, do what you love and the money will follow. See you all in the next one.